Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media, generally related to three different topics: wealth building, commodities, and/or financial topics. I'll interject my opinions as we go through it. Let's see what people are sharing. If you want to follow me, it's @finance. And if you want to join our community, findingvalue.com is where I dive deeper into all these things, looking for potential investment opportunities. I look at trying to master the art between risk and reward and the probability of success. I use technical analysis, I use ratios, and I use market conditions, which is cycles, to determine what I think looks good. So, starting off with Bob Coleman, he says, Bitcoin bros, be very careful what you wish for. At the height of the gold and silver boom in January of 1980, the governor of Alaska introduced a bill to put 15% of their public employees and teachers' pensions fund into gold, silver, and platinum. It looks like politicians are at it again, pushing for a Bitcoin reserve after the asset has already had a magnificent run. So they're chasing price here. So be careful. We could be at a potential top, I think is what he is alluding to. Michael Burry says, breaking, the U.S. national debt has reached an all-time high of $36 trillion. That's $108,000 per U.S. citizen. Who's going to solve this? Well, it's not who. It's how is it going to be solved? And I don't think it will be solved. Solving something means that you are in a problem. Recognizing that you're in a predicament is a situation where you handle outcomes. So when people say who's going to solve this, you don't actually solve anything here. You have to handle outcomes. Outcomes are you going to default in an inflationary way or are you going to default in a deflationary way? The way that almost all countries have defaulted has been through very high inflations. Hyperinflations is where a lot of these end up. And that's where they just print money to cover the debt and or obligations that they have. And I don't think they can cut their way out of this. And I think that's why interest rates potentially could be continuing to go up, 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 and then eventually I don't know what happens. I guess they just continue to print is the solution, perhaps. Warren Buffett says you can give someone a $2 million bonus and they're happy until they see the next guy got 2.1 million and then they're miserable. You know, I was on the Discord channel and someone on the channel asked me a question. The question was, um, do I get frustrated with dumb people getting rich off of Bitcoin or cryptocurrencies in general? You know, meme coins and all these other things. Um, my answer is no. I don't get it doesn't impact me from an emotional standpoint. It doesn't impact me for anything because I play the game that I know well. I don't know crypto in terms of how it's going to sustain any value at all. So I would rather not take the risk and miss a so-called opportunity than I would be to try to go into a potential opportunity and not understanding the risks. So if you want to be more resilient in your life, and I'm not saying to be super conservative. What I'm saying is I looked under the hood, didn't like what I looked at, and I didn't buy the car. When I look under the hood at crypto, I don't like what I look at, and I don't want to put any money or investment in it because I don't like what I have looked at. It doesn't mean that I understand it. It doesn't mean that I don't understand it. It means that what little I do understand of crypto, which might be a lot more than what most people think, I don't like what I see. I don't like the layers that are behind it. I think there's potential fraud going on. So, talking about this a lot because people are excited, they're talking about it. And I could very well miss out on an opportunity, but there's going to be many opportunities out there. You don't have to ride every single opportunity that comes up. You don't need to be a part of it. All you need to do, and this is a quote from Warren Buffett. There's no if you don't swing at a good pitch, you don't ever strike out. Like there's no strikes in this game. You just wait for a fat pitch. You wait for what you understand, the company that you're comfortable with, the setup that you like, then you can take a big bite out of it. You don't have to play every single pitch that's thrown your way. And if I don't like the risk reward profile on something, that's where you can get into trouble, is when you don't understand what you're getting into. I don't understand the allure, or I don't understand what's going to keep people in crypto at all. All I see are a bunch of people running into something because the price is going up and they don't want to miss out. That by definition is FOMO. The majority of people who do own it don't understand it that well anyway. So I'm looking at this, it's like we've got a bunch of people who don't really understand it all that well, running at something just because the price goes up and they want to get rich. They think that they can get rich quickly and easily. And that to me is my risk meter goes up and says, you know what? This isn't what I want to get into. And when I look at it and the design of it, I don't like the design of it. So that's what I mean. I think this is what's going on. Is people are seeing other people get rich and they're just FOMOing in head over fist in it. Energy hitting a new 6-month high again today, despite crude oil near the lower end of its range. And I think this is positioning that's occurring before crude oil goes higher. That would be my guess. For energy, XLE. In gold we trust, this chart remains scarily accurate. And what this is, it says once is by chance, twice is by coincidence, 3 times is a pattern. And we're just going up and down right with it. And we've got potentially a big move to the upside in a perhaps a final leg higher in inflation. And this is a fractal if you want to know. The pattern is what I call a fractal. And fractals are repeating patterns over time. It is the psychology of the herd that is trading in the markets. And that is what we're looking at. And to me, it does look like we're going to get another inflationary push. Rock bottom entry says a huge move is brewing in crude oil. We have an upward bias given the strength in various other correlated commodities. We also have momentum breakout watch where we could see the relative strength indicator break its downtrend. We are at multi-year support, and we do have a bullish engulfing that occurred a few trading sessions ago. So this looks good to potentially go higher if we can get a break here in the relative strength indicator. We're also seeing a lot of the equities break out to 6-month highs here and start moving higher, which means there is money rotating into the equities before potentially the crude oil futures price starts to move. So this is looking good, and other people are starting to take notice of it. The fertilizer index is confirming a major cycle bottom. Now here's another thing. We can start to stack data on top of each other. What is the likelihood of oil breaking down if natural gas is already broken out and fertilizers are about to break out? Well, those are all inflation sensitive assets. Oil moves in tandem with these. This peaked out, that was 2022. Oil peaked out in 2022. They're very, very similar. And they're all putting in these big roundish bottoms. We're seeing the relative strength indicators, momentum coil, and ready to break to the upside. They're all looking pretty good. This also includes uranium. I know I've got a lot of uranium followers. Uranium's looking good. We're starting to get the big green candlesticks, the small red candlesticks, the momentum starting to shift. And then I think they're all going to move together. Energy ETF XLE breaking higher, XOP following suit. If you want the rock star companies, join the website, Black Friday coupon code. So here we are, ripping to the upside for XLE. That looks like a pretty clear breakout. Now, some people say that oil's going to crash. Then explain this chart. Why are people positioning in XLE oil's going to crash? And why do they have massive big candlesticks? And I hate to say it, but the first candlestick was this bullish engulfing right here that happened. This is in weeks. So 1, 2, 3, 4, 5, 6, 7, 8. That was 8 weeks ago, 2 months ago. And I'm sure some of these people have put out that this was going to crash when we had positive signals already developing 8 weeks ago. Then we've got XOP, which also is breaking to the upside. And the smaller companies like the mid caps move behind the large caps. This is what I consider to be the large caps breaking out. This is the mid caps. And then the small caps are also starting to break out across the board. And this is XOP on a longer, bigger picture view, shoulder, head, shoulder, and the potential break of that neckline here to the upside. Looks fantastic. John Kemp says U.S. gasoline stocks are at the lowest for the time of year for a decade since 2014. Inventories were 8 million barrels, about 4% below or minus 1.08 standard deviations below the prior 10-year seasonal average on November 15th. And the deficit had widened from 2 million barrels, minus 1%, 7 weeks earlier on September 27th. Low gasoline inventories have attracted the attention of investors, with hedge funds and other money managers purchasing futures and options contracts equivalent to 56 million barrels in the 9 weeks to November 12th. Well, the way that I view this is that they held the price down for elections somehow. And this is why we're eating through inventory, because the price is too low. Demand is too high and the price is too low. And here it is. This is where we're at, 209. U.S. gasoline inventories. We're supposed to be building, but this is by year. We've got U.S. gasoline inventories 2024. You can see how low we are in relationship to previous historical years, and we're about one standard deviation away from the historical average. Then we've got money managers' net positioning in U.S. gasoline. You can see that we are getting a little bit positive net positioning. And then money managers' total long and short positions in U.S. gasoline. It is up there a little ways. And this is gasoline, not oil. Gasoline. Long positions. Favor long. Optimal allocation, so this is gold allocation, is 14 to 18%, while actual allocation investment funds is 1%. When will Western investment managers wake up? So it says, our calculations show that the integration of gold into an equity bond portfolio significantly increases the Sharpe ratio. And where you want to do is you want to go where it peaks out. And it's between 14 and 18% where it peaks and starts to roll over. I'm in the 20 to 25% camp for physical metals, but I use it for the ratios. And that's what I found that I'm comfortable with. But 14 to 18% sounds pretty good. HFI research, by our estimate, balances could swing north of 1.5 million barrels per day on a normal winter versus 22-23 and 23-24 winter. This higher heating demand will inherently boost heating-related liquids like propane and propylene. Market participants have forgotten what bullish heating demand will do to oil balances. Q4 and Q1 balances will be materially impacted by weather. We could see a sharp move lower depending on weather. And that also will impact on what Europe's weather's like too. Because liquefied natural gas is going to be yanking supply from us. Total offshore rigs, oil and gas, ex North America. So not North America, excluding North America. There we are kind of moving up and down here. We pulled back a little bit in 2024. We're from 2023, 221 versus 226. Just a little bit. EU nat gas prices trade at fresh 1-year high near 48 pounds per megawatt power. That's 14.8 MMBTU. Supported by Russian supply concerns and robust demand following a period of unusually cold and windless weather, reducing power supply from renewables. Storage sites are 90% full, which is less than the 5-year average. So here we are. This is TTF gas continuing higher in the upper left. On the right here, this is TTF winter. This is GIE, European gas storage percent full. You can see that we are coming below the 5-year average right where we're at. We've got winter spring EU gas movements. We are running deficits out of inventory. Daily gas flows to Europe. They're probably going to start to increase here dramatically. And then LNG on water for the last 20 days is starting to increase to the upside, and it's going to yank Henry Hub pricing up with it, I think. We also have a lot of LNG capacity coming online, terminals, at the end of 2025. I'm back. Josh Young says, you may recall that the IEA previously forecast large oil inventory builds in 2024. And here we are not building. We are not building. Interesting. Terry Bro says, winter in Paris, gas storage now below 90% full. This will tighten the gas balance not only for this winter, but also for next summer. You can see that we were on the upper end here because of warm weather the past 2 years. 2022 was warm, 23 was warm, and 24 was warm. We've been on the right side of weather so far for natural gas to stay low. If we get on the wrong side of weather, this is going to get real interesting. That's all I'm going to say. It's going to get real interesting. The prices could move dramatically in a very short time frame. Kevin Bambro says the bottleneck will soon be basic resources for many industries: energy, metals, chemicals, and yes, even water. And what he's responding to is Katusa, and he says data center water consumption has begun causing riots, especially in places with rising water scarcity. A Google data center in Uruguay planned to use 7.6 million liters of water a day, as much as 55,000 people would consume. That's on top of water shortages so severe that authorities are adding salty water to the public drinking water supplies. Uruguayans staged protests. And this is with all of this AI and data centers, they need it, I think, for cooling. Tons of water consumption. You know what else is also consuming a ton of water? Shale oil production. They are producing or consuming or using, however you want to say it, 3 to 4 barrels of water for every barrel of oil extracted. We've got water consumption going up through the yin-yang all over the place. Here's Breakwave, VLCC, which is the big tankers. Slow and steady wins the race. Rates continue to tick up, approaching the WS60 mark, Meg/East Fernley. So we continue to go up steadily and slowly in VLCC rates. Breaking news, MSTR MicroStrategy is the biggest bubble in stock market history. With a market cap of nearly 110 billion and earnings of only 500 million a year, is truly concerning and designed to load retail into a Ponzi scheme stock. MicroStrategy will pop just like it did in 2000 for this person's opinion. They do have similar charts though. You got to admit that. Coming up, so can I become a billionaire by starting a company that perpetually issues new convertible debt and buys meme coins with the proceeds? That is literally no different from what MicroStrategy is doing. I don't know. I guess maybe you could start a company and start doing that. But that's where I'm going to end it, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. That's all I've got for today. We've got a question and answer session coming up Saturday, 7 a.m. Mountain Time. But that's all I've got. We'll see you later. This is Finding Value.